In a world where the US dollar once reigned supreme, a new global financial leader has risen, causing a seismic shift in the economic landscape. The once invincible king dollar now teeters on the brink of losing its dominance, with China leading the charge. The shift has intensified as more countries join China's move away from the dollar, posing a critical question. What can the US do to counter this trend? As we delve into these changes, it's clear that the US dollar's unchallenged rule is under threat, an unforeseen challenge that has now become a stark reality. The catalyst for this shift is China, whose de-dollarization efforts have gained momentum and support from other nations. As of September 15, 2023, the US is left with limited options, seemingly resorting to maneuvers to maintain its financial supremacy. Meanwhile, speculation is rife about the Federal Reserve's interest rate strategies. As June 2024 approaches, there's a growing belief that the Fed might reduce interest rates, a move that has significantly impacted financial markets. This has led to a spike in US Treasury bond interest rates to 4.082%, the highest in 9 months, affecting both investment returns and the broader economy. However, this increase in interest rates, perceived as a tactic by the US government, has prompted savvy investors to divest from US Treasuries. The result? A historic low in demand for 30-year notes since July 2011, underscoring the mounting uncertainty in the US debt market. In such times, when signs of a potential US recession and debt crisis loom, traditional safe haven assets like gold become increasingly attractive, marking a significant shift in global investment trends away from the dollar. Amidst this financial upheaval, the US dollar's long-standing position as the cornerstone of the global economy is being vigorously challenged. China, once a mere player in the financial world, has now ascended to a pivotal role, spearheading a coalition of nations in the quest to dethrone the dollar. This development, once unthinkable, has materialized, pushing the US dollar to a precarious edge. China's strategy of de-dollarization, initially a solo endeavor, has now evolved into a concerted effort with growing international support. As these dynamics unfold, the US faces a dilemma, with limited strategies at its disposal to preserve its fading fiscal supremacy. The broader implications of these shifts are evident in the anticipatory buzz surrounding the Federal Reserve's potential policy shifts. The market is abuzz with predictions of a possible decrease in interest rates by June 2024, while the likelihood of an increase in September is now deemed improbable. This speculative atmosphere has jolted the financial sector, particularly affecting US Treasury bond interest rates, which have surged to their highest point in nearly 9 months. This uptick in interest rates, though potentially beneficial for bond investors, also signals a broader economic impact, making US Treasuries a less attractive option for investors. This perception of interest rate manipulation by the US government has led to a strategic retreat by astute investors from US Treasury bonds. Consequently, the demand for 30-year notes plunged to its lowest since July 2011, a clear indicator of the growing skepticism and uncertainty surrounding the US debt market. In these turbulent times, when indicators of a looming US recession and debt crisis are becoming more apparent, investors are increasingly turning towards traditional safe havens like gold. This trend is gaining traction globally as investors seek alternatives to the US dollar, a currency that once seemed unassailable. China's growing influence and economic prowess have significantly impacted the world, particularly in challenging the US dollar's hegemony. The US dollar, not backed by tangible assets, allows for unrestricted printing, which has raised concerns among investors. According to analyst Zoltan Pozsar, a global shift away from the dollar's dominance is underway, with central banks seeking alternative currencies. The US's strategy of increasing interest rates to bolster the dollar as the global reserve currency is losing effectiveness. Oil-producing countries, notably Saudi Arabia, are leading efforts in de-dollarizing oil transactions. These nations, including Saudi Arabia, Iran, Iraq, and the UAE, some of which are BRICS members, are exploring gold-backed digital currencies for international settlements. Iran, a significant player in the oil market, plans to launch a digital gold coin named Payment, backed by physical gold, to ease cross-border transactions. By October, digital currency contracts are expected to be widely adopted in industries like oil, marking a departure from traditional currency transactions. China, a major gold producer and consumer, is bolstering its gold reserves, indicating a shift towards integrating gold into its de-dollarization strategy. China increasingly uses the yuan in oil transactions, including for Iranian oil purchases, often settled in yuan or euros. Japan, a longtime US ally, is also moving towards de-dollarization, engaging in negotiations to use digital currencies in energy trade settlements with Iran. The US dollar's stability and future are increasingly questioned, prompting a global shift towards alternative currencies. Russia, too, is contributing to this trend, aiming to link gold with oil and launching a gold-backed digital financial asset through its largest bank. Central banks worldwide are amassing gold reserves at an unprecedented rate, moving away from the dollar. This transformation of the global financial landscape with the rise of gold-backed digital currencies challenges the dollar's dominance and may lead to a new monetary system. China's leadership in de-dollarization has been beneficial globally, inspiring other nations to explore alternatives to the dollar and diversify their reserves. This shift is leading to a more balanced and multipolar financial system, reducing reliance on the dollar and enhancing economic stability. The appreciation for China's role in initiating this change is widespread, as it has opened avenues for other nations to pursue financial independence and resilience. As the world witnesses these transformations, questions about the future of the US dollar and its potential comeback arise. What would happen if the yuan becomes the new dominant currency? How will the US react? The possibility of the US reclaiming its dollar dominance remains a topic of debate and speculation. Now, if you like this video, check out this next video right here.